Good morning. Welcome to another Dornbusch download. Another Wednesday's rolled around quickly again. Brendan.
Right.
Brendan very kindly joining us this morning. Number 106. So yeah, they are ticking away. And a pretty tough week or so, Brendan, on the market as well. I know that you've been doing a bit of work on some of the technical indicators that are out there, and certainly, you know, the ASX 200 approaching, and even if not crossing over that 200-day moving average level.
That's right. That's where we're at now at the moment, is around that 200-day. So if we see a breach of that, it tends to be bearish. So we tend to expect maybe another down move. And again, we discussed on a previous recording that 5,000 is also like a very strong support, but if that's broken, then we could see even further downside from a technical standpoint, that is. So.
Yeah, no, that 5,000 point mark could be critical, couldn't it? Absolutely. Investors tend to like those nice round numbers. So 5,000, albeit it should be, as you say, a good and a solid support level. If we do breach through that, you know, there certainly could be some more downside ahead. But anyway, we'll cross that bridge if we get to it. Hopefully we don't. And I guess, you know, a lot of the volatility, Brendan, of course, is around the US Federal Open Market Committee. You know, they're getting together towards the end of this month, actually the 21st of September, to talk about their interest rates. Bit of concern that, rates may actually be going up in America, and the consensus from a lot of people is that the American economy still not quite strong enough to absorb an interest rate rise. At the moment, there's only about an 85, other way around, around about a 15% probability that interest rates will go up. 85% still believe that, you know, rates will stay on hold. But that seems to be causing a fair amount of distress at the moment. Of course, you know, North Korea launching a few bombs, test missiles, a few things like that. We also saw the European Central Bank with their interest rate update there last week, but there was no word of any more stimulus. So the market wasn't overly happy with that. And again, we've seen a pretty tough couple of weeks on our market, back to about 5,200 at the moment. So, but I guess coming up, Brendan, too, in the next couple of weeks, a bank reporting season. You know, Commonwealth Bank and Bendigo Bank, they report with the traditional financial year from 1 July to 30th of June. NAB, ANZ, Westpac actually have a slightly different financial year. They operate from the 1st of October through to the 30th of September. So we'll be getting some bank results from NAB, ANZ, Westpac, probably more towards mid to late October. But we have seen a fair bit of pressure on bank shares, and financial stocks generally have been on the nose a bit. So be interesting to see how those bank reports go. Of course, banks traditionally held by investors looking for dividend yield. But yeah, pricing has certainly come under some pressure, and certainly CBA now back to 52-week lows. So if you're looking for yield, bank stocks still might be, you know, of interest, but we're probably expecting, you know, a bouncy old ride between now and then. And now another little company too, Brendan, I've been just having a bit of a look at, a company called NextDC. They basically provide data centre services, so up there in the cloud somewhere. Basically, you know, businesses like ours, but a lot of businesses these days not having their data stored on the premises as such, you know, outsourcing it, you know, to another crew, whether it be in the same city or even the other side of the country, even the other side of the world. But this little company was listed back in 2010, has got data centres in Brisbane, Sydney, Melbourne, Perth and Canberra. Supplies about 42 megawatts of storage just at the moment, but they are looking at increasing that with a new data centre in Brisbane in Melbourne also, and also just recently announced in Sydney. So one to look at. It's a little bit on the spicier end of town. There's no dividend yield with this particular company, so if you're after dividends, this company's certainly not for you. But NextDC is the name. NXT is the stock code, trading a little bit below $4 at the moment. They're looking at raising about $150 million in new capital, $100 million through the retail sector, so existing shareholders are going to be offered to buy new shares at $3.74 and $50 million being offered through to institutional investors at $4.06, I think it is from memory. So a little one there if you're looking for a growth story. They're going to be taking on a little bit of debt as they progress these new data centres, but hopefully again the cash flow at the moment's enough to sustain that without any further capital raisings over the next couple of years. But one to keep an eye on, Brendan. We'll see how we go. I'll be just tracking that just to see how that holds up. But that's about it, Brendan. Been an eventful couple of weeks, and no doubt a bit more volatility to come through. Yes. September, October, renowned for being bouncy periods. But anyway, that's us for today. We'll catch up with you next time.